Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 30th, 2025, we're diving into Bitcoin, which is experiencing significant volatility and reacting to some groundbreaking news. The crypto world is buzzing with yesterday's massive announcement. The SEC has officially approved in-kind creation and redemption processes for all spot Bitcoin and Ethereum ETFs. This is a game-changer, allowing large institutional investors to directly exchange BTC or ETH for ETF shares, streamlining operations and reducing friction for arbitrage. It signals a major step towards integrating crypto into traditional finance, a definitively bullish long-term development. Adding to the regulatory landscape, the White House has released its crypto report outlining a risk mitigation framework. While it emphasizes consumer protection and anti-money laundering, it also aims to balance innovation, which generally provides a more stable foundation for the industry. Now, let's turn our attention to the charts to see how Bitcoin has been responding to these events and other market forces. Looking at the daily chart, we can see the significant price action over the past year. The overall trend since early 2024 has been a strong uptrend, despite several sharp corrections along the way, demonstrating remarkable resilience. Despite a recent $450 million Bitcoin sale by Galaxy Digital, the market largely shrugged it off, with Bitcoin returning near the $119,000 level on July 29th, as reported by Cointelegraph. Our daily chart for July 29th closed around $117,945, showing the strong intraday move and the market's initial reaction to the ETF news, pushing it towards those higher price points. However, CNBC also noted a fall in Bitcoin and Ether prices on July 29th as investors awaited Fed rate decisions, indicating short-term sensitivity to broader macroeconomic factors. A key support level emerged around the $117,000 mark, which aligns with Dawn Crypto Trade's observation about the latest CME Group Bitcoin futures weekend gap closing. This level has shown strong support recently, preventing a sustained downturn. Let's zoom in on the 15-minute chart to get a clearer picture of the very recent, high-frequency price movements leading up to July 28th. We observe Bitcoin consolidating in a relatively tight range around the $118,500 to $119,500 area. This short-term price action, characterized by smaller candles and fluctuating volume, suggests a period of indecision following the significant upward pushes. The resistance around $119,500 is evident, with multiple attempts to break higher being met with selling pressure, indicating a ceiling in the immediate term. Conversely, support is holding firm around $118,500, with buyers stepping in whenever the price dips to this zone. This tight range indicates that the market is currently digesting the recent news and waiting for a clearer directional catalyst, potentially related to the broader economic outlook or further institutional flows from the ETF approvals. Returning to the daily chart, let's reflect on Bitcoin's long-term behavior. We saw a significant dip back in early August 2024. Notice the sharp decline on August 5, 2024, when Bitcoin plummeted from over $58,000 to below $50,000 in a single day, accompanied by massive selling volume. However, this was followed by a strong rebound in the subsequent days, showcasing the market's underlying strength and demand for Bitcoin even after severe pullbacks. This type of volatility is characteristic of crypto markets, but the consistent recovery points to robust long-term bullish sentiment. From a longer-term perspective, key support areas are established around the $90,000 to $95,000 range, which previously acted as resistance before turning into a strong foundation. Another critical support level lies around $80,000, as seen during the strong bounce in February 2025. On the upside, Bitcoin has already surpassed its previous record high of $109,135 mentioned in Yahoo Finance's report earlier this year, reaching highs over $123,000 in mid-July. This means the immediate resistance is the recent peak near $120,000 to $123,000. Trader Roman's prediction of a potential pullback to $108,000 is a key level to monitor for downside risk, especially if bearish divergences across price indicators fully play out. This level, around $108,000, aligns closely with the support seen in early July 2025, reinforcing its significance. Conversely, a sustained break above $120,000 would open the path towards challenging new all-time highs, potentially fueled by increased institutional participation following the SEC's approval. The market appears to be in a crucial phase, where positive regulatory developments are clashing with short-term price consolidations and potential profit-taking. In recap, Bitcoin is currently navigating a period of consolidation following significant bullish regulatory news. The immediate key price levels to watch are the support zone around $117,000, which, if broken, could lead to a test of $108,000, a downside target suggested by some analysts. On the upside, overcoming the psychological and technical resistance around $120,000 and then $123,000 is crucial for Bitcoin to continue its upward trajectory. Short-term, we expect continued volatility and consolidation, perhaps within the $117,000 to $120,000 range, with a 60% likelihood, as the market digests the influx of institutional interest versus any Fed announcements. Long-term, the outlook remains cautiously bullish, with a 75% likelihood of further gains towards new all-time highs above $123,000, contingent on the smooth integration and positive impact of the newly approved ETFs. Conditions reinforcing this bullish sentiment include sustained institutional inflows from the in-kind ETF redemptions and continued regulatory clarity from frameworks like the White House report. Conversely, a broad market downturn or unexpected negative regulatory action could reinforce bearish pressure and increase the likelihood of hitting lower support levels. Always keep an eye on trading volume. High volume on bullish breakouts or bearish breakdowns confirms the strength of the move, while low volume during consolidation, as seen on the recent 15-minute chart, suggests indecision. Look for a decisive break of either the $120,000 resistance or the $117,000 support level on higher volume to signal the next significant trading opportunity. That's all for today's Explain the Charts analysis. Remember to like, subscribe, and hit the notification bell to stay updated on the latest market movements. Happy trading!